Okay, what is good, everyone? Just here to post my first video on my new YouTube channel called The Informed Minority. Um, yeah, I'm just gonna be posting every single trade that I take and kind of explaining it, kind of like a active journal for me, on YouTube to also document my journey and my process. There'll also be vlogs on here sometimes and just like real talks about trading and how I got to where I am and a lot of things that people don't talk about and the reality of trading. But today's topic is just going to be the trade that I took on December 12th, 2024 on MNQ in high resistance liquidity run. Kind of give you the breakdown with that. So right here, as you see, this is the trade I actually took. So the blue arrow is pointing at or signaling where I bought, and the red arrow is where I sold. As you can see above, you have the target. I was targeting $100. That's pretty much what I'm doing now. At the beginning stages, I will just target $100. Even if it goes further, that doesn't matter. And I'll kind of explain a little bit about this as I'll show you the breakdown, how I got to the point of where I took the buy there and ended up um, selling my position at that high. You see partial up there, but I really only am trading with one contract, so can't really take partials. So that's something that I was just up, that was there, and just my learning as I evolve. So here is Thursday's price action, as you see here. You can clearly see that it's high resistance, and it did, I guess, trade lower at the end of the day, but I was still able to capture something. And you can kind of see it doesn't look like Tuesday, if you remember that, and it doesn't look like Friday either. And I'll kind of explain how I got to that point. So how did I expect a high resistance liquidity run? How did I expect this type of price action to occur on Thursday? We had a large range day the previous day on Tuesday, went crazy, ballistic. So the next day, I expect something like this. Now, I didn't take any part in Tuesday. Um, I watched it. I didn't see my setup until after the fact, which is okay. Again, realizing, understanding that these things happen almost every day, my setup. So I wasn't concerned. I didn't try to force anything. I just kind of waited to the next day. I did expect this. I didn't expect another day of expansion just because of the time of the week and all this other stuff that was playing a role in it. Some of the things that also helped me delineate kind of what's happening and how I'll do it, but this day didn't it wasn't a factor. And usually that is the opening range gap. So, my mentor ICT talks about how the opening range gap, you want it to be larger than, let's say, 40. He likes 75, that area. So this opening range gap was 73.75 handles, and it was a discount gap. So we know that we're looking for, at least before 10, 70% of the time that it will trade up to 50% or consequent encroachment of that gap. Now, we did not get that in um, this day, but that was still my target as I was looking for upside. I didn't think we would get massive expansion, but I was looking for upside price action. So I just wanted to um, put that out there on why I was expecting this and how I wasn't eager or fast to jump into the market. So kind of the framework that also set it up was the new week opening gap from December 8th. So the current week, new week opening gap. When I saw that we had, the body closures above here and started expanding above here on the 15-minute chart. Remember, he talks about how you want everything to be overlapping. When you start to have overlapping PD arrays, you can have a higher confidence in your trade that is going to pan out in your direction. So when I saw this on the 15-minute chart, this kind of set the stage for me, like, okay, now we're ready to go. And as we go down to the lower time frames, you'll see that why waiting was very, very important. So that set the stage, the new week opening gap. So these are things that I do at the end of the day. So you're kind of getting like the end of the day kind of markups that I'll do that are important to me. Yes, there's a lot of other things on here that you may see, but these are just things that are important to me and like what I'm looking for. So we had the PPI news, we had the low and we had the high. Notice how also the low would be right above or hit right at the new week opening gap. And look at the bodies even stay above this low and then expand above. So we have this breaker here, right? Then we have these down series of down close candles, which would be an order block. So extend that out in time. We have a breakaway gap, inversion on the 15-minute chart. So we close above here as well. And so all of this stuff was helping me come to the conclusion that we're probably going to take out this high. I was initially looking for these highs here, but we didn't get that until I think the next day with the 90 point or 80 point new day opening gap. That was crazy. So, but yeah, this is the stage that kind of I saw on the 15-minute chart. So I'll go down to the 5-minute chart, same thing. So yes, it looks all messy and all, everything is over here. But this is how I'm visually like looking at it. And my charts don't have all of this on there at the same time while I'm trading. They have specific things, as you saw in the other thing. I think I only had the M5 inversion fair value gap, right? And so here's the same low. It expands away, breakaway gap, and we have order blocks and 15-minute inversions, 5-minute inversions. And notice how they're staying above at the top end of it. And that's what I'm looking for in my trades. If I'm not seeing overlapping PD arrays, especially from the higher time frame down, and the lower ones aren't overlapping in the upper end or the higher end of it, then that's not necessarily a trade that I really want to take. It's not saying it can't win, but for me, it's not as high probability. And if I were to take the trade, there would be less on the trade if that were to be it. So this is what the 5-minute chart looks like. Go down to the 1-minute chart. So here's where all of the nice stuff is. So here we know that we hit the new week opening gap, expanded away. Notice how in the beginning of the day from 9:30, which is this opening price right here, notice how we chop and consolidate sideways. There's no real, the first presented fair value gap doesn't get shown until here. So for me, that's very, very late, right? I think it was like 48 or something like that, or 9:58. It was something like that where it was like really, really late in the day. That's also letting me know that's going to be high resistance. So I already knew I had to be patient and I was going to wait. I wasn't going to try to jump in anything. I wasn't going to try to short ending up here because there's nowhere for me to put my stop. This doesn't even look like anything I want to get in. So I didn't want to get into it. I wanted to see specific elements. I was also looking for higher prices. So there was no short that was going to get me in. This could have went down forever. I really wouldn't have taken a short. So now we have a breakaway gap here. The first presented fair value gap is here. This candle right here, this large white one, if you extend it out, that's what it hits. So when it hit that and then expanded away, I felt comfortable entering in here. And notice how even this 15-minute breaker, notice how the inversion fair value gap, notice how the 15-minute, if you look on the 15-minute chart, remember how the bodies were being held above. So everything for me was signaling that we're going to trade higher, and it traded above this PPI, I think it's CPI high. So that gave me the confidence, that gave me everything that I was looking for to take the trade going higher, right? Again, we're looking for key signatures, key elements in price. Notice how the bodies, we do not lay a body below or even on this. Expand away, come back down. It's okay. It's consolidating and at the opening range gap high right here. This is also the high. Not only is it order block, but it's also the high of the open range gap, right? So if we go to the next slide, here's the first presented fair value gap that I was talking about. Extend it there. You see the reaction from there. Also comes back down to it later, but I was not in on that. And then, my entry was there and then took it up to there. So for me, that's a very, very late first presented fair value gap. So I was not interested in anything above, right? Look at that. It's all chopped sideways and didn't want to be in that. Here's the open range gap. So we also had a discount gap. So what we're looking for, 70% of the time for it to trade higher. It did that here. And also took out the CPI high. Now look at us consolidating above here and also hitting the open range gap of the 9th. Again, we have that there. But we also have the new week opening gap. That's what I was more or less looking at, not this open range gap from the 9th. So here is the macro. So I note the macros pretty much every day. So we have the low pretty much being formed inside of this macro, at least in the morning session. And then we have the high form at 10:50 to 11:10 macro. Why did I get out at this macro? Why didn't I try to hold or try to make it go higher? Like, what was my reasoning for that? Well, one, it's high resistant. So by this time, it should have, when it went above the high, it should have expanded. It did not do that. So that was my first key of understanding that. My trades usually hit their target in 30 minutes or less. We were at 45 minutes or so. So for me, that is a very, very long trade in terms of at least going to target. And you can kind of see it's high resistance. I already know that. I can see it visually that it's high resistance, right? There's like everything is being overlapped. I also was not in a rush to jam my stop because I knew the parameters of the day, or like the game, as ICT would call it. Like where can it stay in and where can it go out of? I mean, we just keep seeing it overlapping, so I'm not going to jam my stop loss up there and just to save profits. Like if it comes down and stops me out, it comes down and stops me out. Like I knew where my stop was and I felt safe doing that. Um, yeah, so that was the main reason why we got there. Also, around 11 o'clock to 11:30, I know that it's going to run against what's profitable in the morning. So what was profitable in the morning? Buys were, I will say, more profitable. So I already knew that if it doesn't expand in this macro, I'm going to get out. It's going to probably stop me. It's going to trade deeper than what I would want to see. And if you see that, it trades deeper than what I would have wanted to see. So I'm happy with my choice. I'm happy with the things that I have done with watching and back testing and doing all that, the data and the stats that I needed. That's what helped me understand that I need to get out at that time if it doesn't expand. And even if it had expanded after, it wouldn't have mattered. I still would have got out at that time stop at 11:10. That's exactly when I closed my trade. So again, here is the trade that I took. As you can see here, we took out the CPI low, which is nice. And then what? Expanded up, traded above. Remember, this is a 5-minute inversion, and there's all this other stuff on here, but on the other ones. But look how we stay in the upper portion. Not only do we not put a body there, we stay in the upper portion of this inversion. That's letting me know that I am more likely on side and it's going to hit up here, even in high resistance condition. As you can see, I was targeting $100 up there. It didn't get there. That's fine. I used to be a stickler about that, where it needed to hit this. Now I understand that that doesn't necessarily matter, and it proves that today. And if I would have tried to do that, I would have gotten stopped out because my stop was right here. I had a picture, I thought, but I cannot find it right now where my stop was, but it was right below the first presented fair value gap, right there. Um, but yeah, that's pretty much the trade. I'll also like to end on, how can I improve for the next week? And then also like, what did I do well this week? Something that can help me improve was I was stuck on the new week opening gap, and I didn't switch to the opening range gap, which would have helped me see that up here we were hitting actually consequent encroachment of that new week opening gap at the specific time, which would have been the 10:50 to 11:10 macro. So I should have gotten up there, right? There's always room for improvement. That would be something that I can improve on. It would be looking at the things that are important right now. After I saw this right here, the new week opening gap to me is not as important because I'm expecting it to expand away. So I look at the next level above, which would have been the new opening gap range from the 12th of December. What did I do well on my trades? I was patient, very patient. I didn't get caught up in this. I wasn't trying to find anything in this because there's really nothing there for me personally. What I also did well was I understood the market condition. I understood it was high resistant. I understood that the characteristics of a high resistant liquidity run. So I was not just going to jam my stop up, but I also was patient, right? I know that's going to take a little bit longer to get up there. I know it's going to run and overlap things. So like I'm not upset when I'm seeing these things. I'm not getting scared. I'm not getting, oh, maybe it's going to turn. If it turns, it turns. I'm just wrong. But I'm seeing signatures that I want to see that are going in the direction that I'm looking for. And then this is one thing I always have to repeat myself or repeat to myself is to trust my training, right? Trust the data and all the things that I've seen and the work that I've put in. to understand that if I'm putting on a trade, I'm putting on a trade for a reason. I'm not just putting on a trade just to put it out there. And so when I repeatedly tell myself that, when I see um my trade setup, I'm confident in taking it, even if it loses, right? I'm trusting the things that I've seen. And I just think it's important for me to also keep reaffirming that to myself, keep doing the things that helped me get here. And so this is pretty much the trade setup that I took on uh, Thursday. So I'll pretty much be doing this every week. I drop them on Saturdays. If I do anything, if I don't anything. Now, I did tape read yesterday, but I'm not putting that up here because I did not take the trade. And that's more for my personal stuff. And so anything I do, I will put up on here. Thank you guys for listening, for those who listen. If you like this type of content, please like, share, and subscribe to let me know. This is the stuff that you're kind of looking for. I'm trying to also not only help myself, but also help other people that may be, struggling with certain things that I had struggled with before, or maybe just another way to look at the markets and you're just interested in how I do it and how I break it down. Again, thank you for watching and listening, and I'll see you guys on the next one. Peace.